Line lectures to Form 3 for accounting, fourth quarter syllabus. The topics that are included in the fourth quarter for Form 3 accounting are depreciation, analysis and interpretation, and accounting concepts and the principles. Right now, we are going to start with the first topic, which is depreciation. Before starting for the depreciation, we need to know the difference between the current assets and the non-current assets. Current assets are those assets which keep on changing on day-to-day basis with the business activities. Like inventory, the inventory is the goods that the business trades in. So it is that the inventory is held for sale or consumption in the normal course of the business operating cycle, or it is only used for the trading purposes. Cash, the trade receivables, the money in the bank, it is all a part of the current assets. Non-current assets are those assets which are in the business for a longer period of time. Means that the business does not buy them for resale, rather it buys them for using for a longer purposes. By long-term use of the business of assets, we mean those assets which are to be used for more than 1 year. Here we should keep in our mind that whether an asset is current or non-current, it all depends upon the nature of the business. For example, for a furniture business, the wooden chairs, tables, sofas are the current assets. Why? Because the business trades in this and they buy and further sell the wooden furniture. But for the educational institutes, universities, offices, these all sofas, tables that they have in their offices, they are a part of their non-current asset. The reason being, they haven't purchased it for reselling. So, non-current assets are those that the business buys for long-term use and not for reselling. Another feature of the non-current assets is that they are of permanent nature. When we talk about permanent nature, it means that their value does not fluctuate on the daily basis and it remains constant for a few months or so on. Like the assets such as building, plant and equipments, computers, furniture fixtures, delivery vehicles, etc. that we are using, their value remains constant for a longer period of time. Okay, it is not going to fluctuate on the daily basis. Neither the business gets them revalued on the daily basis because the business has purchased them for the long-term use. So the two very important features of these non-current assets is that they are for the long-term use. Secondly, they are of permanent in nature. Another feature of the non-current assets is that the value of these non-current assets decreases with the time. For example, when a business buys a truck for say $1 million, it starts delivering material at the various shops or whatever it has been bought for, its value starts decreasing. It is because of this reason that the tires of their truck are being used, engines, various body parts are being used. Similarly, when we buy a mobile phone, you know that with the usage of it, the battery lifetime starts decreasing or the sensors of the touch screen slow down. So it means that when you take it back to the shop and to resell it, the shopkeeper is not going to offer you the same value at which you have purchased it. Okay, everyone would have experienced it, that definitely when you have been using a phone for say a month, 2 3 4 or so on, and you take it to the shopkeeper for reselling it, he would definitely say that its physical condition is not the same, it does not seem to be new, or he would be telling you the reasons that why he's not going to give you the same value at which you bought it. So means that the value of that mobile phone has decreased because of the usage. In simple words, depreciation is the cost of that part of the asset which has been used. Like the mobile phone you have used, so its value has only decreased by the part that you have used. But in order to define it exactly, depreciation is an estimated loss in the value of the non-current assets over the expected working life. Again, depreciation is an estimated loss. Here we need to be very much clear about it, that depreciation is an estimated loss. It is not an exact loss. When we talk about estimated loss, it means that supposedly that you have bought a delivery truck of say $1 million and its working life is 10 years. So the estimated loss for the delivery truck each year would be $1 million divided by the 10 years of its life. Means the value of the truck would decrease each year by $100,000. So the depreciation of the truck would be $100,000. By the end of the first year, as the value has decreased by $1,000, so now the value of the truck is $900,000. But we can't say it to be an exact value because it all depends upon its usage. If the truck has not been used for so many deliveries during the year, let's say just hardly 10 or 12 deliveries during the year, its tires are extremely new, its physical condition is new, so the value of truck wouldn't have decreased by the same amount as we calculated, which was 1 million divided by 10 years equal to 100,000. Rather, the value would have decreased, but maybe by simply 50,000 or 60,000. So, but if the truck has been used for many times a year to deliver the goods, the tires have gone flat, the paint has eroded, in that condition, maybe the value of the truck would have decreased by more than 1,000 as well. So, it is that depreciation is just an estimate. It is not an exact value. Now, many students would be asking over here, then how can we know the exact value? The exact value of the loss or decrease in the value can only be known when the non-current asset is disposed of or sold out, because only then we would be taking it to the market, getting the price for it and compare it with the cost for which we have purchased it. And in this way, we can get the exact value. So depreciation is just an estimated value and not the exact value. Moreover, another thing important over here is that only the non-current assets are depreciated. It applies only to the fixed assets or the non-current assets. It does not apply to all of the assets, including the current assets as well. The reason being that loss can only be calculated for those assets which are for a longer number of use. Those which keep on changing in the business accounts, they can't be incurring any loss for the business. So depreciation only applies on the fixed assets or the non-current assets. Another thing is that important in this definition is the depreciation is to be worked on expected working life. Keep in mind the working life and the expected and the life of an asset is different. Life of the asset means that till when it is with you, whether we are using or not. Like supposedly that you have a table in your house whose leg has been broken. So it has been kept in the store for getting repaired, or a new table was bought in place of it. As that table is still existing, so it is definitely having its life. But working life means when it was being used, means that till the time when you have used that table, say for 1 year, for 2 years, and so on, that table you had working life of it. As in the example I have said, that there was a delivery truck of $1 million which had a working life of 10 years. So means that the working life is very much important for calculating the depreciation. Another important information to be shared regarding to the depreciation is that depreciation is an expense. If the business does not record this expense, then definitely its profits are going to be overstated or leading to wrong figures. So depreciation is an expense, because as it has written in the definition that depreciation is an estimated loss in the value. A loss that is to be shown in your books means that it is an expense for the business. And this expense is to be recorded in your business books, in your income statement, so that we can calculate the accurate net profit. Depreciation is a non-monetary expenditure. Many of the students often think so that depreciation, as I have told in the last slide, that it is an expense. So many of the students feel so that it is a normal expense, like any telephone bills that we are paying, the wages or salaries that we are paying, which require cash outflow. But it is that depreciation is a non-monetary expenditure, means that it has nothing to do with the money that is to be set aside for the purchase of the new asset in case your old asset is to be replaced. Okay. So depreciation is a non-monetary expenditure, means that it does not involve any money transaction. For the monetary expenditure and non-monetary, you can also simply take an example like your mother is offering the services at your home of supervising your maids or the servants, taking care that they have cleaned your room, you are given the food in time, and all these activities are done by your mother. But as your mother is not being paid anything for it, so for your house, it is a non-monetary expenditure. On the other hand, the salaries that are being paid to the servants and the maids, it is going to be a monetary expenditure because it involves money transaction. So in accounting, monetary means money. Similarly, as I have told, that depreciation has nothing to do with the money that is to be set aside for buying any new asset. So it is a non-monetary expenditure and it does not involve any payment. It does not involve any cash outflow, or it provides a cash fund for the use of replacement of the non-current asset. So if a business charges a depreciation of $100,000, it is only an expense, but a non-monetary expenditure because it does not involve any of the cash outflows. I have given you a list in the beginning of the non-current assets that were or are to be depreciated. It is buildings, plants and equipments, computers, delivery vehicles, etc. But the list of the non-current assets that we have discussed in our first quarter or previous in the previous lectures as well, it also includes land. But you can see that I did not use the name of the land in the list of the non-current assets. I have only used the name of the buildings, plant and equipments. Then it is the machinery, delivery vehicles. So it means that land is a non-current asset which is not to be depreciated. Okay, so land is a non-current asset which is not to be depreciated. Now, what is the reason that why land does not depreciate? Land does not depreciate because it has an unlimited useful life. When we talk about unlimited useful life, it means that it can be put into various uses. Like supposedly a piece of land that we can grow various crops on it. Like in one season we can grow rice, in the other we can use it for wheat crops, then the sugar canes, and like this. Moreover, if you are not want to grow anything on the land, you can construct a farmhouse on it where you can go over there and enjoy with your friends and families over there. And you can use a part of that land for as an orchard as well, where you have grown the orange trees or the mango trees like this. Still, if the land is not enough fertile, we can construct buildings on it, houses. It can be used as the playgrounds, means that this land can be used for many of the purposes. But the other assets like building, it is depreciated over the useful life because they can fall into disrepair or become obsolete. It means that first of all, they have limited usage, and along with the limited usage, it also has to be repaired and maintained, or it means that there is the limited usage or no usage for that buildings or whatever the delivery vehicle or the asset you are using. Like if we take the example of the delivery vehicle, it is that the delivery vehicles, once they are used for a year, 2 years, or say maximum we have taken as an example of 10 years working life. After that working life is over, that delivery truck is of no use because it would be requiring a lot of repair and maintenance. It would be requiring it to be painted new tires, engines, etc. So definitely, as it has a limited life and it is requiring repair and maintenance and also has become obsolete, so that is why that delivery truck is of no use further for the business and it would be replaced by a new one. So the important things that we have discussed in today's lecture is that, first of all, land is not depreciated. Depreciation is a non-monetary expenditure. Then it is that depreciation is only charged or applied on the fixed assets. The cost of that fixed asset should be spread over the useful life. As I give you an example, that when we buy a truck of $1 million and its working life is 10 years, it is that we would be dividing 1 million by 10 years and get 100,000 each year. Means that we have spread that cost of the delivery truck over the life of the 10 years. And the portion of the cost that has been used, this is called depreciation. So this is I think so, the basic concept of the depreciation that was required to be given to you in the today's lecture. I hope so that it is clear to everyone. Again, before and winding up my lecture, I would like to repeat the definition of depreciation, which is a loss, estimated loss in the value of the non-current asset over the expected working life. Again, it is estimated loss, not the exact loss, and it is only for the value of the non-current asset, and it is over the expected working life. So the important terminologies which we would be using again and again in the next lectures as well is this estimated non-current assets and the expected working life. Okay, thank you, children.